Friends, in the last video I said that fear is back. And now the price of Bitcoin is $23,000 again. We'll take a look at the mood of the market, but more importantly the processes that are being set in motion right now, regulators at the global level, including the IMF and the Fed. Let's get to the bottom of this. I decided to start the video with this particular topic because it can have a lot more long-lasting consequences. Do you remember that the Securities and Exchange Commission has been forcing the stock exchanges lately to shut down stacking? As it did with Kraken. And also leaves the top one exchange Binance without a branded stablecoin pushed, how they decided to go even further and to put the industry as a whole in jeopardy. In a new interview, the head of SEC Gary Gensler stated that only Bitcoin, in his opinion, is not a security. But all other cryptocurrencies, including Ethereum, should be considered exactly as unregistered securities, which are the beneficiaries in the form of their developers, and all of the buyers of these coins are investors because actually bought them for the purpose of making money. But I wouldn't be saying that the regulators are up to no good if it was just about the segments, and yet their claims on the industry are used to and the serious players have stepped up. As the Federal Reserve System, all right, there is an official warning from the Fed that banks are at great risk when working with crypto companies. Remember the news that on February 8, Binance stopped withdrawing funds in US dollars, then they said they would find another bank partners to resume the service, but it has been 2.5 weeks, it has not happened yet. And after such a warning, looking for them for a very long time. The guys from the International Monetary Fund they prepared a report on cryptocurrencies where they said that Bitcoin should not be considered as a legal tender because it poses a threat to the existing monetary policy. Let me remind you that the status of legal tender effectively puts Bitcoin on the same with the national currency and oblige all sellers of goods and services to accept payment. As of today, this is only fully realized in El Salvador, and yes, the IMF is holding up their credit program because they haven't obeyed them and legalized Bitcoin. Bottom line, we have sections of the Fed and the IMF, and they are all very to do anything to hurt the cryptocurrency market because they want to set their rules on it. No, it's not scary food. And I'm not gonna yell save yourselves. But it's very possible that this is the point at which the industry is starting to get a lot of regulation, which will lead to a significant change in the entire marketplace. 8. While we are on the subject, we should to comment on the events that's going on in China. And what they're saying that there might be a bullish restart market. I posted in our Telegram channel about the Chinese government decided to ban the GPT chatbot in country because the chatbot doesn't comply the ruling party's censorship. There was a brief hint that this news also means a lot to the cryptocurrency market. So it is known. The regulator of Hong Kong, which is on its way to reintegration in China, is about to give the green light to trade cryptocurrencies. But there is a nuance, or rather 3 at once. We'll begin these processes on June 1st, and in order to operate in this jurisdiction, all crypto exchanges need to get a local license. Only selected assets. It is Bitcoin, Ethereum, and a few other. Main condition being a member of at least 2 indexes. Cryptocurrencies have high liquidity. Look at these coins, they have the best chances of appearing on the Hong Kong market, and the final argument is that Hong Kong will open cryptocurrency trading, but at not mainland China, which is where the main market is concentrated. Most as before, the Chinese will need to find ways to get around the government's ban on cryptocurrency trading. More cryptocurrency insights? I'm waiting for you, and you are welcome in our channel on Telegram. Subscribe right below the video. And now let's talk about what's so the market is so scared. Since our last review, the situation has changed as follows. The S&P 500 index continues to correct and went below 4,000 points, which still looks like as a retest of the downtrend line, and the optimists can take comfort in the fact that the stock is about to go back up. But the sellers have the initiative now, and the sellers, keep pushing the market down on the bad US inflation data. Friday's drop took place on Friday after information about the growth of the index of expenditures. US personal consumption expenditures index in monthly in terms of. If in December it was 0.2%, in January it was 0.6%, that's a threefold increase. This index is referred to as the Fed's decision on monetary policy. We can open up the stock market together, and see how the market expectations for a rate hike at the March 22 meeting. And this data well tracked. So on the 25th January, No one even thought that the Fed might return to a faster pace of rate hikes, and 18% expected that as early as March, the regulator would stop rate hike process. Then today on February 25, no one is expecting a zero-rate decision by the Fed. And 27% are preparing for Jerome Powell's company will again decide to make plus 50 points. Key metric as remains inflation data for February. We will find out on March 14, which is about a week before the Fed meeting. Last time the market was able to digest that inflation fell several times worse than forecast by only 1/10 of a point. Let me remind you that the worst case scenario for the market is if inflation turns out to be sticky and remains high for an extended period of time. Because in that case, the Fed would have to raise interest rates above 5 or and possibly 6%, which would open up straight to a recession, and the fall of the cryptocurrencies are independent from the high is very likely to follow stocks. It's also worth noting that over the last month, we have seen a rebound in the dollar index. A strong dollar has always been a harbinger of crisis and led to fall in risky assets. By all means, I'll be checking in the future to see how this indicator specifically here and right now Bitcoin is in a local downtrend at 4 o'clock. But the RSI has almost gone to the oversold area. Oversold, and we've reached a strong support at $23,000, which held the price for a relatively long period of time until it was pushed down by the new entry threshold. In addition, the S&P 500 is not trading this weekend, so there's a good chance to hold on to the current on the daily chart. The picture is worse. We can continue to work out the RSI divergence, and there is still some room for the continuation of the decline, and the Bollinger Bands indicate a move to local decline with a target at $21,000. Of course, a price chart is a thing. I don't give any financial advice. I'm just showing that the current layout is really not in favor of buyers. Plans to go above 25, go to 28 or even 30,000. Bitcoin has paused for now, and to change these sentiments will require some strong incentive.